If you start to follow the money, you don't know where it takes you. The thing is, you gotta be patient, learn your craft, love your craft. Because business is a bit like war, with the exception that wars end. Sharpen your tools with knowledge. Listen to this next conversation. Learn a thing or two about a thing or two. Join me now, won't you? This next episode of the Flippin' Bricks podcast. Today I'm actually really excited. We have a special guest for us today, Trevor. Trevor does many cool things. He'll tell us a little bit about it. But I guess in a nutshell, is he provides a pretty advanced stock screener. He has quite a few different tools on there. I'd highly recommend you go check out his website, stockalgos.com. I'm already a member. I've already signed up to all the different modules on there, and I got to say I'm pretty excited to check it out. But I guess without any further ado, Trevor, why don't you introduce yourself? Give us a little bit about who you are, what you do, and what Stock Algos can do for the rest of us.
Yeah, Mike, thanks for having me on. So a bit about me. I come from a mechanical engineering background, but I've been pretty entrepreneurial since university. Worked on a few ventures while I was in school, realized that the desk job wasn't for me, so that was pretty good motivation. I've dabbled in pretty much like every area. Got a lot of experience eventually on the development side, so I started off hiring people, realized that the quality of work produced was pretty bad. Eventually with time, it did get better as I knew what to look for. So by the end of university, I had like teams overseas that were relatively reliable.
Very cool.
Like good at building products, but you kind of need money to launch a product as well. And you learn a lot of things as you're in this entrepreneurship game for how the world actually works. So when I graduated, I obviously still wanted to keep the like unicorn-esque software as a service startup going, but I realized that you need deep pockets, and raising funds isn't as easy as the world makes it seem, because you always see the success stories. You don't see how many people are trying and are getting rejected, especially when you're a kid fresh out of school and you haven't exited a successful business yet. So I ended up starting my own development agency with these dev teams I had overseas, building tech products for other people. Got some pretty good experience, see how other entrepreneurs thought, what made them successful or not successful, and got good at like building solid web and mobile applications throughout that period. A little bit in between starting Stock Algos and that development agency, which has been running since 2017, I worked as a CTO of another tech startup called Startup Fuel. It's basically a directory of a bunch of startups and investors. It's meant to be a community to help people collaborate, raise funds, and find developers, also help investors kind of find the best startups. I decided to go my own way, run my own company, wanted the autonomy of being a solo founder. The reason for that is because the work is dependent on you. You can't look at someone else if something is going wrong. If something goes wrong and you're the solo founder, it is all because of what you have done. So I liked the idea of that. I liked being the sole person responsible. And also at the same time, I was super passionate about finance. The reason I'm passionate about finance is because engineers work with numbers, problem solvers, and I figured that there must be a way to code something that will continually make you money. So cracking that stock market code, that's what kind of became an obsession of mine throughout the years. And then, so I partnered that obsession with my coding abilities and started coding these like apps and tools during the bull market of, I believe, 2020 to 2021. And I thought at the time, like, okay, so you have all of these people that are building these tools for themselves to make money. Or like a software developer will code a good algorithm and they will sell it to a hedge fund for a few $1 million. But you have this other model that's become apparent where people can post, like, for example, Netflix, they charge $15 for a service, but they have millions of people. So they're worth, hundreds of billions of dollars.
Right.
They aren't just selling that one service to one person for, say, like a few million. So I wanted to, at least initially, create a platform where all these developers that were selling tools to hedge funds could sell to the middle class and hopefully strengthen the middle class at the same time. So everyone would have access to these tools and technology. That being said, and let me know if I'm rambling a bit.
No, feel free.
That being said, with that marketplace model, you often have to create one side of the marketplace for people to even come. Because why would a developer list with us if we have no one using our platform? So it's that chicken and the egg. So we coded about 17 tools, apps, algorithms. They all do a variety of different things. Mm-hmm. And that's because the world of finance is very diverse. There's a lot of different factors going on, and we're trying to encapsulate all of these different methodologies that people have used in the past to improve your chances of winning. We do not actually, we're transitioning more from algorithms to like a solid research platform that allows you to backtest previous trading strategies on historical data, mm-hmm. but you can't actually use those algorithms quite yet. Maybe down the line we'll enable like trade integration with those algorithms into your personal account, but right now it's more just backtesting. So there's no money on the line. You can just see if this would have worked in the past. And then the research tools, you can obviously make trades based off of that, but we aren't ever pitching a specific stock. It's up to the user to come on, learn, and make their own decisions based off of the data.
Sounds a lot like, so for those of you who haven't actually been on stockalgos.com yet, there's actually a really cool feature on there called neural nets, which I want to touch on a little bit too. And that'll kind of help, explain, the machine learning aspect of it. But I just wanted to kind of refresh really quickly here. So you said that when you first started off in business, you were kind of in university getting through that kind of a phase. I'm sure you're familiar with something, a Y Combinator, or I'm not sure which university you went to. I went to Waterloo. So we had this thing called Velocity, and that was kind of like our startup hub. And, you got to learn a lot about different technologies and things like that as well. I actually ended up working at a cybersecurity firm just through some connections that I had met through a startup. Have you ever tried joining a startup network? And did you find, if you have, did you find that it was useful to you at all, or not quite?
I have not personally joined. I had friends so I went to Queen's.
Nice.
I had friends that were pretty entrepreneurial as well, and they did the Queen's Accelerator.
You might know my buddy Matt, actually.
Yeah. They learned a lot. Some of them actually went on to run like some pretty successful businesses. I didn't end up applying because at the time I thought that I could do it better myself, which is naive, but also coming from like a 19 to 20-year-old standpoint, you're just like, I'll watch a bunch of YouTube videos. I don't need to sit in class, but I probably would have learned quite a bit. Mm-hmm.
Well, that's what Elon said too, right? Is, there's nothing that you can't learn online for free that so I know, like, just talking from my own personal experience, there's a lot of, because I was a part of the networks, like the Velocities and all that. I did economics at Waterloo. So I was always dabbling in that. And we had this really cool program actually called Business Entrepreneurship and Technology, so BET. And we got to learn a lot about the different like in-class models, but I don't think that it was necessarily the wrong idea going into it, thinking that, I can do it. Because if you didn't have the mentality, you wouldn't have done it in the first place, right? So it wouldn't have mattered. So, but you also mentioned a little bit about how you tried the corporate life. Me too. I did try that. Like I mentioned, I tried working on a cybersecurity firm for a little bit. I only lasted about 9 months. And I kid you not, one day I was sitting on my desk and it was almost lunchtime on a Friday. And I said, you know what? I don't think I want to come back after lunch. So I literally went, I wrote up my resignation, and I was locked out of my computer by 1 p.m.
Wow.
Yeah, because I wanted to go and, start my own business. That's what I do here. Did you have a similar feeling? And is that kind of what, I guess, spurred you to not do the corporate life? Because I don't know if you're anything like me, but I don't like the corporate life. I show up to work in a suit, but I'm allowed to leave whenever I want. So it's a win-win.
My experience was slightly different. My ability to interview isn't great. I'm like painfully honest, and will just tell people exactly what's on my mind, and
Brilliant.
I can't kiss butt, and I've always been like this. And I feel like a portion of that is needed to at least secure the job. I did get a brief stint at a web development agency in the summer after graduation, where the guy would charge $4,000 to build like something that someone would make in a day, and he would pay us, I think, $250 to make it. So I was thinking, like, okay, if I could sell one of these sites, maybe every 2 to 3 weeks, then I'm better off doing that than, working one day to actually create the site than working and making, 5 to 10 sites, or 20 sites per month.
Exactly.
So I set off on like trying to acquire clients and looked into it, and that's how my web development agency began to grow, and was a pretty solid business. So.
Right on. Okay, so we basically went from university. We kind of figured out your corporate life. We got to where you started coding in 2020. And then it sounded like from what you said, your problem was, I need to find a way to get the middle class to get good investment data through a stock screener. And that's kind of how I want to lead into neural nets. And because honestly, that's what I found most impressive about the website. There's, again, a bunch of really cool screeners on there. I'd highly encourage everyone listening to go and check it out. I'll put the link in the description as well. But tell me a little bit about what a stock screener does and why, as a day trader, I should have it. So you're solving the problem of getting me data. What do I do with that data?
Yeah, so there's an insane amount of data flowing out there on like every company, and there's like various depths of that data. Ultimately, like, you have to think about a stock like a business, and that business is running, it has employees, it has ways of making sales, and there are like verticals where you can compare these companies. So this goes back to fundamental analysis, where they've created ratios to compare companies operating in the same verticals. If you're looking, and that's one aspect. So you have your fundamental buy and hold long, and then you have your day traders, and day traders will trade based off of a few key points. So either there's like these big trading days for events that will happen in the company, such as an earnings report, where companies will release how they have done for the past 3 months, and analysts will have comparing or make predictions on how they think that company will do. And basically there's one day where that information's released, and you have all these algorithms that large hedge funds are imposing that are calculating to see if the current stock price matches how the company's actually doing in real time. So you will have these huge jumps in stocks. And then there's like, you could day trade based off of if you think they're going to beat earnings or if you think they're going to not beat earnings. And based off of like either one of those outcomes, the stock will either move drastically up or down. So there are people that will trade based off of that. There are also people that will trade based off of just pure charting. So they know certain chart patterns and what they signify, and people have even coded algorithms to model that charting in real time. So it's like instantaneous, and they will trade based off those patterns. And since they know the algorithms are doing that, they're hoping that they will beat the algorithms that have to process this insane amount of computational data, but they're looking at the chart directly, and they're like, okay, I can set my own personal touch. And then hopefully you have an alpha by either entering and exiting very quickly. So you aren't basing it off of that fundamental data of actually running the company. You're basing it off of how that chart looks at that current time and pattern recognition. So not tied to the real world, not tied to the real business. It's just purely based off of numbers, which is why, so we coded a neural net. And when I say coded, we basically found existing neural nets that other hedge funds and traders were using, and we plugged that in and we saw which ones did the best. And we decided to basically offer that computational power of that neural net, but we gave it a very nice like front end facing design. So what that means is when a user comes to our site, instead of having to code the neural net, basically they just select a stock that they want this neural net to look at. Mm-hmm. And then we will fetch the data from the back end on that stock, plug it into the neural net for them based off of certain parameters they set. And the neural net will spit out multiple different computations of how to trade that stock. So how a neural net functions is basically you can look at stocks have all of that trading data. So they will open at 9:30 Eastern time and they'll close at 4 p.m. And the stock will like go up and down like you see on the chart. And the neural net will basically start at a random point in this like and this might be too mathematically confusing, but there's like a 3D array of data where you have time, price, and then also movement. And then the stock is starting at a different point every time, and it's trying to optimize a local maxima. So it may or may not, it'll start at a different point in this 3D graph every time, and it's trying to get to the local maxima, which is just buying and selling that stock, but making a profit every single time it does that. So we give you multiple different variations that this neural net has computed. It's not just one neural net. You are actually, every time you go on and click run, you are getting a very unique neural net based off the data, and it will be different every single time because it starts at a different point and it has to find that maxima, essentially. So it optimizes, say, through a few thousand iterations based off of wherever it started to try to get to the highest peak. And I'm not sure if that makes sense.
No, for sure it does. So when you're creating something like that, how did you even go about? I know you said you kind of took a little bit from some of the other algorithms that have already worked, but how did you actually go about forming an algorithm like that? And do you have to actually train the machine? So I don't actually know a whole lot about machine learning. Like I understand what it's designed to do and how it's supposed to work, generally speaking, from a high level. But like, how would you go about that? So as a day trader, I want to know, hey, if I want to create my own neural link, or if I want to compare this to something that is, I suppose, more like tangible, how would you say is a good way of designing an algorithm to create something like that? So you mentioned to try and get to like your max and mins, but is there something like the magic in between that you wanted to touch a little bit on, or is that just something where it just depends on the data set and there isn't like a magic bullet, so to speak?
So neural nets have come a very, very far way because there are like whole teams of like the best mathematicians in the world working on creating these neural nets. And then there's specific like development services that will offer these libraries of pre-constructed neural nets that you can actually use. So the service that we provide is, instead of someone having to know how to access a neural net or find a good neural net for trading stocks, we've already done that. Mm-hmm. And then we allow you to train your neural net via like a data set that you want. So what you're doing is you're selecting the data set that you want to feed into this neural net, right? And then we show you how your neural net would have actually functioned if it had been operating. So you have your training data set, and then you have your test data set.
Right.
We allow you to feed in training and test data sets into this neural net that is spewing out these like mathematical optimizations based off those data sets. And you're getting however many you want. You can get a lot. It's obviously pretty computationally intensive on our end, which is why we don't allow you to actually like place trades based off of it, because there's probably some delay in terms of when you're getting it. But yeah, did that answer the question?
Yeah, a little bit. So I guess, so personally, before I found your service, I used something called FinViz. I'm not sure if you're familiar with it or not.
FinViz is a great site.
Yeah,
great tool.
Yeah. So that's what I've been using for the longest time. And what I used to do is kind of, screen a little bit. So that's more or less what I used it for. And that's kind of what I found interesting in Stock Algos. Because I can use it a little bit like a stock screener. And one of the things that I thought was actually kind of interesting, a little bit funny as well, was the congressional stock screener that was there. So I figured, if I want to learn to trade like Nancy Pelosi, I can, because, I'd like to make $100 million too. So if I'm a day trader or I'm a swing trader and I'm focusing strictly on, okay, let's say I make $5,000 a month, I want to put 1,000 of that towards stock, build my portfolio. Is there something on your website that you could suggest or you would recommend that would kind of take the mechanics of the day trade or of the neural nets, and kind of combine it into a way where, I can just be just a casual trader. I don't need to be on it every single day, but I'd love to trade like Nancy's. Like, how would you go about pitching your service to me if you're doing something like that on Stock Algos?
So we have basically, you can set up a signal. If you're interested in certain Congress members and when they trade, you can come to our site and specify that you would like to receive an email every time X happens, and we will provide you like a daily digest if that has actually happened or if there's data there or not. With regards to the neural net, we've developed this tool where you can see it's kind of like a fun playground tool, but you cannot incorporate it. We previously had it so it would send you an email based off of when it would have done the trading, but we've removed that feature. And we've left it so that it's just a playground, because we found that for the average user, they're very confused by the word neural net. They're overwhelmed by it. This training and test process, it's somewhat confusing to the average person. And obviously, as our company progresses, we're going to look at explaining and making sure that it's much more intuitive and comfortable. But people are scared to like run something called a neural net. So we've gone to like nicer phrasing such as fundamental or insider or Congress, where you can go, you can see data instantly and you can piece together, because these functions already exist on other sites. We just bring it all together in one spot and provide like a good user interface to interact with the data.
What was the name of the neural net that they had in the Terminator? Maybe you should use that name. That'll really smooth people's emotions over a little bit,
Skynet.
That's it. Yeah. The world is falling. Come join our Stock Algo.
I don't want to get turned.
Nah, you won't. Don't worry. Sarah Connor's got your back. I'm sure. Just write her a letter or something. It's all good.
Sweet.
But all right. Yeah. No, that's really cool, man. So I guess you kind of have an idea of what the Stock Algo does, what it can do for the average user. Who do you see this? I guess targeting. Not necessarily maybe demographically, but I guess geographically. Are you looking more so for North American? Or are you looking more so for Asian? Or are you looking more so for European? Like, what kind of market are you targeting? And I guess, why are you targeting that area?
So right now we've started off targeting North America. As we grow, we can apply these same tools to a bunch of other exchanges all across the world, and we believe that there would likely be a market in these countries as well, but we're taking it step by step. What was your other question?
I was asking like geographically, like how that would apply, but so I guess it can go anywhere. So I guess the the follow-up question to that would be, is where would you find data on this? Because like obviously you can go and scrape data off of something like Google, and you can get a trillion different stock points, I'm sure, depending on what company you would like to look at. But how would you guys find the data, and like what makes your data, I guess, accurate in a metric? In, you know what I mean?
Yeah, so we pay quite a few different services for their data sets. We believe that their data sets are the best for what we have been able to find. Being like a trader as well, you obviously value your data.
Mm-hmm.
I did come from, like, at least the reason I got into this was because I was trading. So, you know, you find the best places and you start using services, and you see how these services could be improved if you were the one managing the product.
Mm-hmm.
So that's where we've got the premise and why we built out these tools, because we felt the existing services didn't have these features, but some of them had good data. So we try to look up where they got their data from, and then we pay those people to give us the same data.
Right on. No, I like that, man, because you literally had a need of your own, and then you figured, you know what, there's probably at least one other idiot in the world who needs something like this too, myself included. And then, you know, you kind of put it together. So that's kind of what it's all about, solving the problem. So I know me personally, I do like a lot of commercial real estate, for example, and you know, I basically do the same thing, just with, you know, different toolbox. You know, every customer's got a need, and, you know, hopefully every service provider, whether you're a software or a physical person or whatever it is, it's always important to solve that need, because without that, the world doesn't go around, and we all got to make a couple bucks on the way, right? So going forward, do you think you're gonna because I noticed right now everything on your site is temporarily, I guess, free. I think you should be charging for the service even as it is right now. I get you're trying to grow the user base and everything, which is fantastic. But how do you plan to monetize this a little bit? I guess more concretely going into the future. Obviously, you're going to be charging for courses. Are you going up the avenue of getting ads on the website, or what do you see yourself looking like, I guess, in the future?
So the charging is going to start coming likely in the early new year.
But I get to keep my free ones, right?
Yeah. If you have it now, it'll be free as like a permanent thank you for being an early user, and kind of, because there are the occasional like small bug, right? So we realize that we want to give you a perfect product, and we're only going to start charging once it's perfect.
Right.
But it's very close.
I can't find any bugs if that's worth anything. So
I appreciate that.
Yeah.
But yeah, so we will probably charge like anywhere from $50 to like $200 a month.
Mm-hmm.
We might have like a freemium option. What we're leaning towards is like a standard pricing, and then we're going to be including a new feature, which you should actually probably be a beta tester for. I think you'd like it. We're in the pre-launch phase for it right now, but this will be our way of kind of like getting people to come back to the site.
Mm-hmm.
The feature is basically a global leaderboard. So I'm not sure if you've heard of Jim Cramer or these other people that will kind of make a prediction on a stock.
Yeah.
But there's no way to track if they're actually good, or they produce so much content that there's like, you can't reference their history. So we've made a place where stock traders will go on, they'll make predictions on where they think the market or a specific stock will go in the next few days. Mm-hmm. So if you think Apple's going to go up 5% in 3 days, we capture the price of Apple when you make the prediction, and then we evaluate the price of Apple until the 5 days is up. So when that happens, you're placed in a global leaderboard of all of these stock pickers, so you can actually see who knows what they're talking about and who doesn't. And the people that do are placed at the top for everyone to see, and they will actually win prizes for free for just making their predictions. And that's launching December 1st. So
you actually let me sneak peek this feature before we got onto the show. I love it. Yeah. I think it's a great idea. A bunch of reasons. First and foremost, it's always just fun to see if you're better than, the next guy or girl trading beside you. Number two, it's good because it's good competition. You know, you and your buddy, you're already on the site. You're already, you know, gunning for the position. It's like fantasy football, but with real stock money instead, which is a bonus. But there's one thing. So I like being a little bit of a goof every once in a while. And you already brought up Jim Cramer. So I would say like at the bottom of the list, like the least accurate, you should list that as Jim Cramer. Because that dude's a football field away from anything accurate at all times. And then I would say for like the number one, you should definitely make that Nancy Pelosi because I think she's an exceptional stock trader. I'm not just saying she's done anything wrong in her life. She's a perfect individual who's very good at picking stocks. But I think that would be funny. That'd
be good. That'd be a good line.
Yeah, and you know what? Because I mean, personally, I think something like this would be great, you know, for the Wall Street Bets community or something like that. Because you know these guys are posting their so-called, you know, YOLO trades online already, anyways. So if you could get them on like an international leaderboard, I mean, that'd be fantastic. I mean, like just imagine where DFV would be on that leaderboard when it comes to like, you know, GME or something like that. Like that'd be unreal. And I think that'd be a good way just to spur some conversation about the service as well, which is, you know, that's the best form of advertisement anyone can ask for. So,
yeah, there's also like a big problem that I'm sure you've encountered and people have encountered with GME. So the moment someone gets a good stock prediction right and they get recognition, what they will sometimes, not every time, do is they will buy the stock before they promote to their network. And because people know that you're a good stock picker, they will then buy that stock, causing the price of the stock to go up. And while that's happening, the person that initially made the tweet or the call will tell you they will be selling as people are buying, and then the stock will collapse. And there you have the bag holders at the top.
The old pump and dump.
So our platform tries to circumvent this because there is a finish date. You can't just say GME's going to the moon. You have to say GME's going to the moon in the next 3 days and then specify a certain price point, and you're evaluated. So if it gets to that price point and it stays at that price point on the last day, then you win. And everyone knows that it expires on that date. So whatever happens after that doesn't matter. So everyone can sell theoretically at that same date. And that's what you're evaluated on. If you sell before that, you will get penalized because your stock prediction will be wrong. It'll collapse before you made the call, and then no one will follow your judgment in the future. So
I actually like that.
Yeah, we want to get around pump and dumps because.
Well, I mean, how else are you supposed to get rich overnight, right?
Yeah.
No, I think that's a really cool service, though, actually, because then like that will, I guess since we're on the topic of GME already, we'll kind of keep going with that one there. But DFV, Roaring Kitty, I think it was all the same person at the end of the day. But I know what he did, basically wouldn't work on Stock Algos, so you could never actually get caught, you know, quote unquote, holding the bag, or at least it'd be a little bit like an option in the sense where you're limiting your loss because, you know, okay, his expectation is X, Y, and Z. So if I stop myself from betting beyond that point, I should be safe. So in a way, it's almost like building in social responsibility for the apes of the world, if you want to look at it that way. And you know, I think that's great for two reasons. Number one, it's a free market solution to a problem that may or may not exist. The reason that I say may or may not is because some people have a problem with, you know, setting stop loss limits, and other people, they just let it ride and see what happens. But, you know, that's to each his own. I'm not going to judge. So for number one, and number two, it's a transparent system, which, again, like the rest of the website, is something that I really enjoy because, like, you know, you need a piece of information, anything you like, it's right at your fingertips. Is that something that you actually had, I guess, going into it, is trying to figure out like any sort of, I guess, social responsibility, or is that like a concern at all? Or it's just more like, here's the data, do what you want?
So we try to teach people how to, like, what other people will look at if they were using that data. So someone comes on and they don't have an MBA or they haven't taken a complex financial course before, we're trying to actually teach as well. A big thing that we want to stick with is helping the middle class. Think that a society is dependent on it, and notice that the middle class is getting squeezed right now. And we actually want to do some good. So trying to trying to do good.
Like the Robin Hood without the app, right?
Well, yeah. So, I mean, we haven't gotten to that stage. I don't know what happens to these companies that set out to be good. Robinhood's interesting. I think it could stem from initially taking money from investors, because then you get this cascading need to grow and this fiscal responsibility to your shareholders. So the founder of the company is now taking money, and everyone that is given him money is expected to make more money. And the only way you make more money is by having a business that makes more money. And Robinhood doesn't charge. So someone has to be paying them for something, right? But that being said, you do get quite a few good tools by using their platform. So they're offering a good service. It's just kind of that transparency of knowing how they make their money. Same with Facebook. Facebook sells your data for ads, but it's a great service. You can chat with your friends anywhere in the world, post pictures. But these companies realistically need to make money to survive. So, yeah. And they feel the need to grow. So they're always looking at ways to make more money. But
yeah, I think that's interesting too, because I know even as you said, when you put money in, you're expecting to make your money, and especially when you get into like unicorn territory, $1 billion plus for a tech company, you're really expecting that quote unquote explosive growth, right? That's what everyone wants. Everyone wants a PE ratio that is 100 plus or whatever it is. So when you're talking about that, one thing that kind of comes to my mind was like FTX, because I know it was during their last round of funding. I think they were getting valued at almost $33 billion at the final round. And I watched an interesting video and this would be a great topic for like the leaderboard, obviously going back, like looking at a past tense. But someone had commented that, if the last investor who values this company at $33 billion wants to even double their money, which is a very reasonable expectation for a company with a PE ratio going at 100 and money's coming in. That company has to get to at least $60 billion just to do that. And like, it's one thing to create value from 1 billion, say, to 3 billion, but to create $30 billion worth of value when you're already at like such a, I guess, advanced stage of funding, when you're in the C, D, E, F, and all the way to Z rounds. I mean, it's very difficult for an investor to try and actually capitalize on any sort of spread, which I think, again, this tool would do very well at. But I think it's just important to have tools available, especially to investors who aren't sophisticated maybe, and they're just kind of looking at it from more of a leisurely point of view. Hey, I read the stock news when I'm on the toilet kind of thing. And, that's where I get my feed. And, every once in a while I'll jump in on GME or whatever it is. And then one day they wake up and say, I want to trade options because they heard a stock tip from their buddy. So I think it's just always important to look back at the tools that you do have and use the data that they do provide and, make logical decisions. And if you want to test it out, maybe have a leaderboard to have yourself, scrutinized on, obviously with a love and care of a supporting community around you. Right. So,
yeah.
But that kind of bleeds into the topic that I wanted to kind of touch upon, which I'm pretty sure is going to be more or less your customer base. There has been, I would say, since about 2019, 2020, I personally noticed it a lot during COVID when that all started, but the absolute explosion of people that had interest in personal finance. So things like, the Graham Stephan channel. I think there's a few others like Meet Kevin, the Coffee Hour. There's a whole bunch of them. Do you think that the rise in the, I guess, new retail investor class and the availability of tools like yours is going to positively or negatively impact the middle class and, I guess, in achieving the goals that we spoke about earlier?
So, I mean, the internet has become this great place where you can learn anything. And I think that there are a lot of good channels preaching how they've made their money, and they're very accurate. It's kind of like when we're talking right now, we're sharing our personal life experience. And if you look at someone that's made money and they're explaining how they've done it, then, it could work in theory. You do have to always take things with a grain of sand, because what has worked for someone may not work for someone else. There's execution. There's also timing. If I were to go start a search engine right now because Google was successful, I would probably fail because Google is successful, right? Everyone's already using Google. Why would they use me? That being said, if you like get them to give you their mindset and how they approach life and how they tackle problems, or how they narrowed down their idea and they found the right product market fit, and then you start applying that and trying that, you could be successful as well. Everything is, it comes down to probability though, unfortunately. There's a lot of people out there working very hard, and there's only so many resources that can go around. So the unfortunate nature of capitalism is, it favors the people that, one, are already wealthy and can employ their capital to work for them, or to like eliminate competitors. Yeah.
Fair enough.
Yeah, that's a bit of a rant.
I would just chime in on one thing. So I'm a very passionate capitalist, I guess I'll say I am. So I'm all in favor for it, and I think that the ability to compete is number one. But it's kind of like how Elon started in the car market. I always like using that as an example, just because, like, yeah, sure, there's other electric cars out there, and everyone's telling you it can't be done. But if you could do something a little bit better, make that a little bit just that much better every single day, I think that you could. So it's not necessary. I mean, like DuckDuckGo, for example, they had a quick little run at Google there, and enough people figured out who they were. There's Brave browsers, but yeah, I'm all about laissez-faire capitalism. Have at it and keep going to war until you find out who wins, right? So
yeah, you got to put a spin on things. You got to make iterations, and some iterations people will like and adopt, and others people won't. You also have to think about like the type of person Elon is. He's an incredibly smart engineer where like nothing can get in his way, and he literally like loves criticism.
Yeah.
I mean, maybe not loves, but like he can handle criticism well and kind of takes it with a grain of sand and knows what he wants to do and what he has to do, and will employ the right people to do that. So it's managing your own mindset as well. The world is throwing him a big curveball right now, and I'm sure his life may be unpleasant. Mm-hmm. But he's just like a problem solver that is doing everything he can to solve problems he fundamentally believes in.
Now pay $8.
Well, the Twitter thing's super interesting because it comes from the standpoint where he didn't like the moderation that was occurring. So he didn't like people being removed. He thought that a free speech platform should be free speech, and Twitter doesn't make money, and he's had to pay a lot of money for that business. Mm-hmm. So due to like when he placed the offer and the price, and I'm not sure on the specifics, but it was likely backed up by his own Tesla stock. When Tesla stock goes down, he still has to come up with that money, but a lot of his net worth is tied up in stock.
Yeah.
So, and also Twitter's valuation also goes down, but he's locked in at that price. So he is now buying a company that like the market would buy at a much higher valuation, and you have to think about every single way to make it make money, mm-hmm. right? And he's trying things, and I don't think he should be penalized for trying things. He's actually getting customer feedback. If you look at any entrepreneur, they always ask their customers how much they would pay for a product.
Right.
And he's doing that. He's saying, okay, how much would you pay to be verified? There's a lot of bots on Twitter. Anyone can post anything. How much would you pay to have that recognition of a blue stamp? And it came out at $8. I think you could honestly charge probably $100 or even $1,000 to make that thing truly valuable. So you only know that like maybe the wealthiest or the most successful can afford this prestigious thing, mm-hmm. right? So, but maybe from his beta testing and group, he's seen that $8 is the best mark. But I think it's an interesting concept.
I think I'm not going to take credit for this idea because it's just an amalgamation of a couple other things that I've heard, YouTubers and just other in-person people discuss. I think Elon didn't care what he paid for Twitter. And the reason that I think that is because he sees that $44 billion as being a drop in the bucket. I can see him having gone to China in his Tesla experiment there with his Gigafactory. He got to see what WeChat was. And then, you kind of start putting together who the investors on part of the Twitter board were. So Binance, for example, invested $500 million into Twitter when Elon was looking for funding. Now, are you familiar at all with WeChat and what it does?
Yeah.
So, like, if you could get your crypto, if you could get your Twitter, if you could get all your socials on there and bring that all into one cool app, I could see that being worth an absolute fortune, like something worth more than Facebook, something worth more than, Snapchat. So you can do all of that in one spot. What's like, you're never going to be off that app. So I could see, the long game of it being quite realistic, I almost want to say, because, just look at the trajectory of his companies leading up before that. Like you said, he's always gone out, said this is the problem. He's always asked for customer feedback, and he's executed on that feedback. Granted, sometimes he's a couple years late, like the Cybertruck, but shit, we all know it's going to come. We all know he's going to do it, and we all know that he has the faculties to do it as well. So that's just my little take. I think once he crossed that 100 billion mark, I think that's when we might see Twitter, I guess, re-IPO, if that's a thing. By the way, Stock Algos does have a good tool for IPOs. I did check out. But so if they did come out like that, I think that'd be a brilliant move. But
yeah. We'll see. Like, I know there are a few other platforms that are trying to do that. Facebook was one of them.
Mm-hmm.
It's funny because some of the best products you see are the simplest because they do one thing and they're able to convey that to the consumer really well and just focus on it.
Yep.
Yeah. So his ability to add all of these features and potential adoption for people to move away from the services that they're currently using that have dominated our way of life, whether it's PayPal or e-transfer or Apple Pay or your Skype or Zoom, and for him to just, take away from all those services and have it in Twitter versus the other people that have a market share, it's speculative. It could happen. Yeah, I don't know.
Well, I wish him the best of luck in there anyways, and hopefully it works out. I'm a fan of Elon, so, go team. Yeah. But I guess I got one other set of questions that I want to ask you, and this one's in regards to my world of real estate, and then we'll wrap up real quick with the conclusion. So I guess we'll start off with, do you think real estate is a worthwhile investment when compared to the stock market? Why or why not?
It depends when, and it depends where. Real estate as a whole has historically been a good investment, but I find real estate fascinating because you essentially have this house and you can live in this house. So the house might cost you I don't know, $1 million, $1.5 million in Toronto, going for these crazy prices.
Mm-hmm.
But the people that are buying the houses are often putting down maybe $100,000, $200,000, and then they're taking out a massive amount of debt from the bank at a very low interest rate in hopes that the price is going to go up to the point where someone else is going to use the bank's money to then buy that asset. But if I were to ask you today to give me $1.5 million, how much money would I have to be generating for you to think it's a worthwhile investment every single year?
So that's basically a cap rate.
Yeah, it's a cap rate. But you also have to factor in your expenses.
Mm-hmm.
And then if it makes sense there, then it's great. And then also the cost of the debt. I think when interest rates are going down, amazing time to buy. I think when interest rates are going up, maybe bad time to buy, right? So it's a optimization problem.
Do you buy stock on margin?
I have not, but I kind of think of option contracts as a similar premise, but you get around margin.
Yeah, fair enough. Fair enough. Interesting. So in
yeah.
the short, so you're saying like probably more so in the medium to long term is where you're kind of seeing investment be real estate investment a better choice, or at least for stability purposes, anyways, right? Because I mean, a house at $1 million today, give or take the interest rate, yeah, you lose a couple hundred here or there, but you know, if you hang on to it long enough, you're always going to be positive in real estate, right? Whereas for a stock, that could be the exact opposite.
So it's worked in Toronto, but if you look at, say, Michigan in the United States.
Oh, yeah, Detroit and all that.
Detroit, yeah. Over the last 20 years, it has been pretty much stagnant. It's gone up a bit, maybe a bit. But the reason is because the underlying economy there fell apart. So the places where we're looking now have good economies right now, but we're entering into a time of economic hardship, right? You're seeing like businesses lay off a lot of people. Now, each one of those, say, Facebook or Meta, Twitter, Apple, they're laying off all of these very high-paying jobs that probably were homeowners. They went from making $300,000 to $400,000 a year to not making anything and having financial uncertainty or looking for a new job, which may or may not be the same price, but it will likely be less when you have a huge flood of talent.
Yeah.
And the employer then becomes like more in control over pricing for this like high quality talent. But that's going to have a cascading ripple effect along with the high interest rates. So it takes now more money for a bank to lend you money to buy the house. So that's going to go down. People are going to they're going to realize that real estate doesn't always go up. And then if you have the middle class getting hit to like, they're now expected to pay more in rent, but you're already having them struggle to meet the existing rent. So how much can you raise rent by? I don't know. And then your interest payment's gone up. You might have like a flash flood of people selling in the next year.
I could see that happen. Sorry, not to cut you off. I could really see that happening in Silicon Valley. So this is obviously a little anecdotal, but I have a buddy of mine, Nick. He actually works out there for Instagram, and he's been there for, I don't know, 8-9 years, something like that. He's been there a while, and he's basically what you're describing. You know, makes $300K a year as a developer there. And the crazy thing is, he makes $300,000, and he's not even like within a sniff of buying a house there just because they're so expensive. But, you know, now that whole landscape there in Silicon Valley is changing, half those people are either, like you said, losing their jobs, or they're moving altogether to either Texas or Florida. They seem like hot spots right now. Nevada, that thing's picking up a few. But I think as that real estate there really starts to dry up, we might see some tulips growing, if you catch the reference to the first bubble. Because I know, like in some of the real estate out there, like people are paying $3-4 million for a house that, you know, if in Toronto, let's call it $1 million. You know, you have, 3 bedrooms, 4 bedrooms, something like that. Everyone's renting a bedroom from you, and that makes sense when you have a house full of tech, basically millionaires once you account for their options and everything like that. But none of them can afford to actually buy that house. So I think that'll be interesting to see how that shakes out. That was a very good point there.
You need buyers to sustain the price, because eventually it will come out to a point where your buy demand is equal to your sell demand.
Yep.
So I'm curious to know where that comes out. I think that housing does rely on a strong middle class, which I think that we've had. But I think that the middle class is really getting squeezed right now. So, I'm curious. Also, a lot of people have just dumped their money into real estate thinking that it's always going to go up, which is the definition of a bubble, right?
Well,
Dude,
don't be telling all my clients that now. No, no, I'm kidding. I tell them myself all the time. Because I'm like you, rather blunt. So people will ask me like, "Hey, is it a good idea to do this?" And sometimes I say, "Yeah, absolutely not. That is a terrible idea right now. I mean, trying to get a positive cap rate on commercial property in Toronto right now, man, go play the lottery. Your odds are better because it's like it's pretty tough out there." So
that being said, Toronto's a hotspot, and if we keep immigration high, it'll continue to do well. So Toronto is a great place to live. We're attracting people that are wealthy from other parts of the world. That is a reason why the buy demand is still up. So as long as that continues, we're in a good spot. But yeah, I don't know how interest rates. Also, the moment that they inverse interest rates or interest rates start dropping again, there's going to be a huge buy side once again. They're going to be like, okay, the price is going up, and then you have inflation factoring in, so the price of your asset isn't the same as what it should have been a year ago, and then mortgages allow you to leverage. So yeah, anyway, that's my 2 cents.
I'm going to just comment on that real quickly, and then we'll wrap up with the final 4 questions because we're almost at the hour mark, believe it or not. That flew by very quickly. But when it comes to the real estate in Toronto, we need about 300,000 homes per year to fill demand. Right now, we're only building about 150, give or take. So we need to build a lot more. So that's why I think residentially anyways, we're not going to see any massive fall-offs in pricing. And also just something that's interesting, if you look at the rise of interest rates versus the decline in home prices, it's actually started to taper off a little bit. So like the general rule of thumb is about $100,000 per point per $1 million. That's just like a rule of thumb. It's obviously different in some areas, and all the disclaimers, but in Toronto anyways, it started falling like that, but it's really started to taper off. So we're seeing like for every, I guess, point increase, we're not actually seeing the full 100,000 decrease per $1 million. So I think that some people are becoming sensitive to the fact that, if I hold on long enough, maybe the prices will stabilize and that'll basically get us back to a balanced market. But I guess we'll finish off here. I got the 4 questions. I ask every guest these questions. I do prep you to let you know what they are, but I do ask that you don't have a written or planned response.
I don't know what the questions are.
Even better. All right. So question number 1, my friend, Trevor, Star Wars or Star Trek?
Star Wars.
Good man. Okay. So you can proceed with the interview. Number 2, best book you ever read?
Sapiens.
That's a good one. Actually.
It's the best.
It's a good one. Number 3, how big is your TV?
55 inches.
Oh, okay. Good. And the last and perhaps most important question, you're going to finish my sentence, okay? I want money because...
it allows you to create more things.
There you go. Spoken like a true entrepreneur, eh?
Yeah.
Let's build shit and break it real fast, learn from our problems, and hopefully cash out before Silicon goes bust, right?
Exactly.
Fantastic. All right. Well, everyone, I really appreciate you guys listening. We're going to have this obviously posted in all the regular spots. We got a Facebook, we got a Twitter. We're going to be putting this up on YouTube. And I'll have the link in to my website as well as Stock Algos down below. Thanks for listening, everybody. Trevor, really do appreciate your time. Thanks for coming on and telling us a little bit about what an algorithm is, what it does, what you would do with your money, how would you plan for it, and why real estate is or is not a good investment. So I thought we had a good conversation. You've been a blast to hang around with, and I look forward to keeping in touch and maybe building some stuff together in the future. All right?
Yeah, Mike, appreciate it. Thanks for having me on.
Awesome. All the best. And I guess we'll catch you guys on the other side. Stick around, listen to the disclaimers, and maybe a little sneak preview of what we got coming up for the next episode. Cheers, everybody. All views expressed by the host or guest are solely their opinions and should not be considered investment advice. This podcast is for entertainment and informational purposes only. Flippin' Bricks would like to thank our guest, as well as Bandit Beats, for the introductory music. You can find any of the links from this episode in the show notes. Be sure to share this episode with anyone you think might be interested. Until next time, I'm your host, Mike Kardash.